Do you want to become a funded trader? So today I'm going to talk about how you can be a funded trader from A to Z, and also the things that you need to know before you start buying a challenge. And at the end of the video, I'm going to talk about how you can stay consistent and long in this funding journey. So first thing first, what is a prop firm? A prop firm is a company that offers traders capital or fund for them to trade instead of using their own money as the capital. So prop firms allow you to get the access to a bigger capital, for example 50,000, right, 100,000 US dollars, 200,000 US dollars. But nothing is free. First, the traders need to pay a certain amount of registration fee depend on the account size you requested, right? And then you need to go through a two-phase evaluation process to get the funded account. And if the trader managed to pass the two-phase evaluation process with the profit target set from the prop firm and also obeying all the drawdown rule set by the prop firms, and the trader can get the funded account. So at the end of the day, if the trader managed to make profit from the funded account, and then they get a split from the profit they made from the funded account. On the other hand, some prop firms also allow traders to be funded instantly with certain program, but the price is also higher for the registration fee, and the profit split is lesser with a stricter rule. At the end of the day, I personally still suggest that traders should go for the two-phase evaluation challenge, the standard challenge, a standard evaluation process to become a funded trader. So if you are a consistent trader, why you should trade with the prop firm? Because prop firm allow you to access to a capital or fund that without risking your own money as the capital. So most of the problems of the traders out there is they have a very small amount of capital, and the only thing they think about to make profit is flipping their account. So if they have $100 account, they want to flip it to 200, to 500, and 1,000 US dollar. So that is unrealistic gain, right? Flipping account 100% per month, per week is unrealistic gain. It's basically just gambling with your whole account to make the 100% gain at the end of the day. So with prop firms, if you are a consistent trader and you can manage your risk well, and you manage to pass the two-phase evaluation process, you can get the access to a bigger capital, and you don't need to aim for a big profit, right? You just can aim for 3 to 5% or 5 to 8% from a big amount of capital, example 100,000 US dollars, and you can get the profits of 5,000 US dollar from a 5% gain. So isn't it a better solutions for the trader, alright, if they can achieve the consistency with a good risk management? Some traders say that if the prop firm give you $100,000 funded account, it's not actually a 100,000 funded account. It's actually a 10% from the 100,000, which is 10,000 US dollar that you can be losing, right? So they are not really giving you the 100,000. Instead, they are giving what you can lose. But what if you reverse psychology and think of this way? Today, if you have 100,000 US dollar, will you want to lose all of the money, or you want to lose with a maximum drawdown? So you don't want to lose all of your money, right? So it's the same thing. If you have the 100,000 US dollar, you don't want to lose all your money. So the drawdown rule from the prop firm can actually help a trader to become more disciplined. Instead of losing all the money, they have a certain rule and let the trader to cautious with their risk management. So if any traders can be consistent in making profit with a good risk management, I don't see that why they don't go for prop firms account, right? Because it's basically free money here, right? So if you pass the evaluation challenge, and then when you get the first payout, you will get the refund from your registration fee. So when you get the refund, you have nothing to lose. So that funded account is on a risk-free mode because basically you get back what you invested at the first point and you can still continue trading it. So the prop firm challenge is an ultimate test for a traders to prove they're consistently profitable or they can manage their risk well. So don't believe all the traders that claim to be profitable but they never pass a challenge or get a payout from a prop firms, because prop firms provides money, all right, provide the capital or fund to the trader if they are consistent enough, and basically is OPM for the trader that no point if you are consistent enough and you are good in risk management and you don't go for a prop firm challenge, right? So how to become a funded trader? If you are new to this funding challenge, right? If you're new to prop firm, please do not straight away buy a challenge from the prop firms. Instead, you should go for the free trial, right? So FTMO provide free trial. You can go to pass FTMO at least 3 to 4 times before you purchasing a trial. So the first step is gonna be go for free trial and pass several times, at least 3 times to 4 times before you start buying a challenge. So the second step is compare a few prop firms, the established prop firms with a paid out proofs. So you can go to some reviews like trustpilot.com to see if they are really paying their traders, and take a look on the review of the paid out of the withdrawal. So I don't suggest trader to go for some new sketchy prop firm that don't really have a proof of their payouts to the traders. So I personally suggest that traders to go for the established prop firm. So you compare the top 3 or top 5 established prop firms in the world, and before you decided which is suitable for you. So I made a comparisons of the top prop firms in the world with the price they are offering, and then the drawdown rule, and also the minimum trading days, and also the profit split and the first paid out. You guys can check it out on the descriptions in these videos, right? And then if you have any questions, feel free to comment in the chat. So the second step gonna be you need to really read all the rules from the prop firm, especially the drawdown rule. So most of the prop firms having a daily drawdown rule and a maximum drawdown rule. The daily drawdown rule means that how much you can lose in terms of your equities on the day. So your running loss cannot be more than 5% per day for most of the prop firms. And some of the prop firms offer 10% maximum drawdown and some offer 12% maximum drawdown, which is the maximum amount that you can lose in equities on your account, right? So the daily drawdown rule and the maximum drawdown rule is very important for a traders to start a prop firm challenge. So after you read all the rules from a prop firm challenge, you can actually start buying a challenge. Right? You can actually start to go into the erosion process, but don't go for a big account size at first if you are new prop firm traders, right? Instead, going into a small account size, and if you can manage to pass it, and if you can manage to get the paid out from the funded account, you can proceed to purchase a bigger account size instead of going straight into big account size. I know the percentage of gain you need and the percentage of drawdown is the same, but it gonna affect you differently in terms of the psychology because of the account size. So the final step gonna be start with small account size, and then gradually increase the account size if you are being consistent and if you have more confidence. So bear in mind, less than 5% of the traders can manage to pass challenge and become a funded traders, and even lesser trader that can actually get their payout from the funded account. So in order to really become a funded trader, you need to have a trading plan, you need to be disciplined, and you need to have the right mindset in trading. So how you can stay long and consistent in a game if you become a funded trader. So you need to know that most of the traders out there that lose their first funded account before they're even getting their first payout. Why? The first reason is because they're aiming for big profit target, right? The phase one is gonna be 8 to 10%, phase two gonna be 5%, but when you go into phase three, which is your funded account, you aiming for 20%, 30%, right? You want to make a huge percentage of gain, you want to make a huge amount of profit with the funded account. At the end of the day, right, you are being too greedy and you lose your account, you breach the rule. This happened to most of the funded traders out there, including me myself, right? So the first payout you can actually aim for as little as possible. Why I say so? It can be 3 to 5%, it can be 1 to 2%, or even though a $10 US dollar profit for you, if you can call it a month. Because when you get your first payout, you are not just getting your first profit split, you are getting the refund from the prop firms. All right, so when you get the refund, basically again you are risk free from the account and you can be continue trading it. So the tips here is, right, aiming for less profit as possible for your first payout, and then continue. If you want to be consistent, don't aim for a big amount of profit, instead going for what is more achievable, what is more realistic in terms of gaining of percentage, right? Me myself, I'm aiming only 3 to 5% per month for my funded account. So if you are interested to become a funded traders, feel free to subscribe to my channel and also check out my Instagram here with the payout proof I get from the prop firms. And don't forget, always trade with the right mindset.